Hey, it's Jack from Jack Gately Real Estate and the Online Real Estate Academy. And what did the Fed just say about the housing market? So the Federal Reserve just met today, and very predictably, they raised interest rates, by a quarter of a point, or what we call 25 basis points. They also indicated that they would raise again at the next meeting, which is in the very beginning of May, by another 25 basis points. But that might be the end of it, actually, because, and I have some notes here, they changed their language in their policy statement from last month they were like ongoing rate hikes, and this month they are saying occasional policy affirming rate hikes. In other words, it could be a bumpy road where we might get another rate hike after May, but don't count on it. They actually just might hold rates level. That's because, according to Jerome Powell, the chairman of the Fed, he said, if I can get this right, tightening household and business credit opportunities. In other words, it's going to be harder to borrow because of the banking crisis. That credit event is basically a rate hike, according to Powell. Yeah, so that's very interesting. It's hard to actually calibrate exactly how a credit tightening is going to be equated. How much credit tightening equals a quarter of a point, right? That's kind of hard to estimate, but that's what the Fed does. So after May, the Fed is saying, yeah, we're not going to raise rates anymore. At least that's the current plan. Now, they made it really clear that in their base projection, they have no plan to cut rates. So going to raise it in May and then hold it steady thereafter, and no plan to cut. However, on the flip side, Powell repeatedly stated the Fed's known policy commitment, which was to keep rates at or return inflation back to 2%. So it's hard for me to believe how they're going to return to 2% without further rate hikes. That's just probably not going to happen. So what probably will happen, in fact, is that inflation will continue to be with us for longer. And it's definitely down from its peaks. You know, it's in the 5s or 6. And money for buyers is now going to become more affordable. In other words, your mortgage rates are going down. If we were to flip to mortgage rates right now, here we go here, CNBC 10-year Treasury mortgage rates right now are almost exactly 3.5. Oh, these are 10-year Treasuries, I should say. Now, mortgage rates follow the 10-year Treasury, and as you can see on the 3-month chart, wow, that was that huge banking crisis, went down, and now it's kind of consolidating. It's down. Interest rates for your mortgage are going to stay at or below of what they are now. Consequently, for the spring market, that probably means easier money to borrow, and that extra money that you can borrow is going to result in higher prices for homes. Let me say that again. If it's easier to borrow the money, then that extra money that you're able to borrow will be shifted into price hike for the home. So this is good for sellers. It's kind of neutral for buyers. Let me show you the price hike that I'm talking about. All right, so this is our average sales price of single-family homes in Massachusetts. And as you can see, as the Fed started to raise rates last year, eventually, they really started to raise rates. The average sales price went down, right? They started to raise rates sometime in March, but they really got into it in a serious way over the spring and summer. And whoa, it went up and then it went down. So given what we hear from the Fed today, and also prices tend to increase in the springtime, we're probably going to see that number go back up eventually over the next couple of months. We've basically retraced the giant bubble that we had. I dare use the word bubble. The giant bubble that we had in pricing from early 2022. We basically have erased that. But now it looks like sellers might be able to recoup that because it's going to be easier for borrowers to borrow. One other thing. About 2 or 3 weeks ago, before the whole banking crisis, Powell was like, hey, we're going to raise rates, through the roof. And now Powell's like, maybe just one other cut, and then we'll have the tightening credit markets do the rest for us. It wouldn't surprise me sometime, say like in July, which is where most people are predicting, that even though he's saying no rate cuts in his base projection, that we start to get some rate cuts sometime in July. A lot of people are predicting rate cuts sometime in July. But let's not get too far ahead of ourselves. Let's just focus on the spring market. And for the spring market, this is good news for sellers, kind of neutral for buyers. Let's stay tuned. Hey, I'm Jack Gately from Jack Gately Real Estate and the Online Real Estate Academy. Have a great day.